Good morning, student. Today is my lecture number 38A, and the name of chapter is Depreciation. This is new chapter for you, and after learning this chapter we will able to understand meaning, features, causes, need, factor determining amount of depreciation, and second will be methods of depreciation, straight line method, retained on value method, etc. So let us start. First, meaning of depreciation. What is the meaning? Students, business firms required fixed asset for the conduct of their business operations, such as furniture and fixtures, plant and machinery, land and building, motor vehicle, office equipment, etc. All those assets have a definite life span. They tend to lose their utility for the business operations with the usage, with the passage of time, due to out of fashion, or due to accident. Thus, decline in the quantity and quality and value of fixed asset is referred as depreciation. This process of allocation of cost of fixed assets over its useful life is termed as depreciation. Now, second point is definition. There are many definitions, so I have written definitions. Some definitions are definition. Depreciation refers to permanent and continuing diminution in the quality, quantity, or value of an asset. William Pickles have said. Second, maybe depreciation is the measure of the exhaustion of the effective life of an asset from any cause during a given period. Spicer and Pegler. There are many definitions is given in book, you can read. Now I am going to explain some features or characteristics of depreciation. Features of depreciation. Depreciation is charged on all fixed assets except land, as it does not have definite economic life. And second feature may be depreciation is a gradual and continuous process. As the value of fixed asset decline due to constant use with the passage of time and obsolescence. So this is also a feature of depreciation. Third is depreciation is charged on continuous basis on book value of assets and not on its market value. Now next point is depreciation reduce the book value of assets in the books of accounts and not its market value. So these are some features of depreciation. Now causes of depreciation. First causes is by constant use. Constant use means the value of fixed asset decline due to constant regular use and due to their wear and tear. Second is by obsolescence. Due to technological advancement, some of the assets are discarded even before their expected life. Photostat machine, computer, etc. These old machines are still workable, but they are replaced with more efficient and economical machines. Loss arising due to change in fashion and change in technological development are termed as loss due to obsolescence. Third point is loss due to accident. Assets often become useless as a result of accident, loss by fire, flood, earthquake, etc. Now, next point of causes of depreciation is by depletion. It means mines and oil wells get exhausted through extraction of minerals and oils on continuous basis. So these are some causes. Need of providing depreciation. or we can say objects or significance of providing depreciation. First is to ascertain true profit and loss. To ascertain true profits and loss. One of the basic objectives of a business is to ascertain true profit and loss. It can be done when all the costs incurred for production are properly charged to profit and loss account. The reduction in the value of fixed assets due to continuous production of goods must be charged as depreciation to ascertain the profitability position of the entity. Second is to ascertain true and fair view of financial position. To ascertain true and fair view of financial position. While preparing balance sheet, asset must exhibit true and fair view of assets. This is possible only when depreciation is provided and deducted from the assets. Now, third point is to ascertain correct cost of production. Correct cost of production. Production of goods for generating revenue require constant and continuous use of fixed assets. The decline in the value of fixed asset is referred to as depreciation, and it must be allocated as expenses to ascertain the correct cost of production. Because for production, cost of fixed asset also used, and when cost of fixed asset decline, then it will include and it will be need for calculation of depreciation of fixed asset also. Now, fourth point is replacement of assets. Fixed assets like plant and machinery, office equipment, etc. must be replaced after the expiry of their use life. When depreciation is charged to profit and loss account, it reduces profit to extent of depreciation. This amount is being used in the business and it is used for the purchase of new assets. When old assets become useless, you can say that our motorcycle after 15 years it will expire and there is no value of registration of motorcycle. So, for replacement of asset, it is need for providing depreciation. Now, fifth point is for correct computation of income tax. For correct computation for correct computation of income tax. Tax liability of the firm is determined after charging all the costs of production to generate revenue. Depreciation is also an expense which must be charged to ascertain the true profit of the business. If it is not charged, it will increase the profit as well as the tax liability of the business. Now, sixth point is to prevent distribution of profit out of capital. To prevent distribution of profit out of capital. If depreciation is not charged, it will mean more profit generation, and if whole profit is withdrawn by the proprietor, distributed as dividend to shareholders, it will lead to declaration of dividend out of capital or withdrawal of capital in of imaginary profit. So, to prevent distribution of profit out of capital, it is need to provide depreciation. Now, seventh point is to prevent worker to demand for higher wages. If depreciation is not charged, profit of the entity will go up and workers may demand higher wages in anticipation of higher profit, which is not true profit. So, these are the some theoretical part of the depreciation chapter. Now, methods of depreciation. Methods of depreciation. There are two methods. Name of first method is straight line. A straight line method, and Second is written down value method. In short, straight line method, also called SLM, and written down value method means WDV. An other name of a straight line method is also original cost method and fixed installment method. There are three names of a straight line method, two other name. One is original cost method and another is fixed installment method. The name of two other name of written down value method is first diminishing balance method and second name is reducing balance method. I will explain all the methods in my next video. Thank you very much.